The theory goes that right now should be one of the best times to be a precious metals producer. Gold has had a fantastic 2025 so far to date, and silver, despite some complaints amongst retail, is up 11% year to date after being up 21% last year. Yet we aren't seeing big gains in earnings from quite a few producers. In fact, some have been basically flat year over year despite this growth in metals pricing. One such example is Endeavour Silver. Let's dive in. But guys, before we get into it, I just have to say, if there's one thing I hate more than people who don't love precious metal stocks, it's people who don't hit the subscribe button. So go ahead, hit that button. All right, back to our regularly scheduled programming. Endeavour Silver in the first quarter of 2025 recorded revenue of $63.5 million, which was somehow down from the $63.7 million in top-line revenue recognized in the first quarter of 2024. The very slight decline follows the cratering of both silver and gold sales on a year-over-year basis, with silver sales dropping by 30%, while gold sales fell 22%. Silver ounces sold during the quarter came in at 1.2 million ounces, which were sold at an average price of $31.99 an ounce, as compared to 1.8 million ounces in the year-ago period, which were sold at an average price of $23.47 an ounce. Gold sales, meanwhile, declined from 10.9 thousand to 8.5 thousand ounces, while the average realized price jumped from $21.14 to $29.03 an ounce. Cost of sales, meanwhile, declined marginally, falling from $52.1 million to $50.7 on a year-over-year basis, while mine operating earnings jumped by 10% from $11.7 to $12.8 million. However, after a $31.9 million loss on derivative liabilities, where the company lost out on hedges on both the Mexican peso as well as the price of gold, Endeavour saw their net loss expand from $1.2 million or 1 cent per share to $32.9 million or 13 cents per share, a 2,600% decline year over year. On an adjusted basis, net earnings declined from $300,000 to a loss of $20,000. EBITDA, meanwhile, went from positive $13.5 million to negative $18.1 million, while adjusted EBITDA declined from $16.1 million to $15.1 million. In terms of cash flow, mine operating cash flow before taxes is said to have improved 7% year over year, going from $20.6 million to $22.1 million. While operating cash flow before working capital changes declined from $10.2 million to $8.3 million. And lastly, Endeavour Silver's cash position declined from $106.4 million at the start of the quarter to $64.7 million at the end of Q1, while working capital sits at just $14.8 million, with the company continuing to plow excess cash into the development of Terronera. Subsequent to quarter end, the cash position led Endeavour to raise $50 million via a bought deal financing, which enabled them to close on the purchase of Minera Kolpa and their Huacha Kolpa Uno mine, which was purchased for $145 million, consisting of $80 million in cash and $65 million in shares. Okay, so if it wasn't already obvious based on the year-over-year financial results, Q1 was not a strong production quarter for Endeavour Silver. Total silver production amounted to 1.2 million ounces, while gold production came in at 8,300 ounces for combined 1.9 million ounces of silver equivalent. Silver production was down 17% year over year from 1.5 million ounces, while gold production was down 18% from 10,000 ounces. Collectively, silver equivalent production came in at 2.3 million ounces in the year-ago period. Endeavour says this performance is in line with the production plan, and at a high level, it checks out. Guidance this year is calling for 7 to 7.9 million ounces of silver equivalent production, which means this Q1 performance places them a bit above the guidance midpoint if you were to extrapolate things out, which might not bode well for the overall financial performance of Endeavour in 2025. And while production is down, costing is up. Cash cost per silver ounce jumped 20% year over year, moving from $13.19 to $15.89 an ounce, while total production cost per ounce ballooned 28% to $24.23 versus $18.90 an ounce in the year-ago period. All-in sustaining costs, meanwhile, climbed from $21.44 to $24.48 an ounce, a 14% increase. Despite the big jump in costing year over year, things are forecasted to get worse, with Endeavour in January guiding to total cash cost to be in a range of $16 to $17 an ounce, while AISC will be somewhere between $25 and $26 an ounce. With that high cost guidance, a result of the two currently operating mines under Endeavour's belt entering their final years of production. We should highlight, however, that guidance is specifically for Guanacevi and Balanitos, with guidance for Terronera, the new up-and-coming operation that is set to be the star of Endeavour's portfolio, expected to be released once commissioning is complete. This seems as good of a time as any to comment on Terronera. Oddly, Endeavour actually said nothing about the up-and-coming project within their Q1 results news release. There was, however, an update included within the MD&A as well as on the Q1 conference call. As it stands, the project is in the final construction stages, with the upper platform process plant commissioning said to be well advanced. Well, the crushing, grinding, flotation, and tailing circuits successfully processed 2 tons of concentrate back in March. The first production stope has already been mined and backfilled as well, with ore stockpiles now exceeding 60,000 tons. Wet commissioning began in early May, which basically means that water and slurry has been introduced into the processing plant under operational conditions. So far, things are said to be going to plan here, with the long-term cornerstone asset expected to underpin the growth strategy moving forward as commissioning and ramp-up leads to full-scale production. Endeavour CEO Dan Dixon, meanwhile, has stated he expects the ramp-up period to be just 90 days from the start of wet commissioning to full production. Terronera is expected to produce 4 million ounces of silver and 38,000 ounces of gold annually over a 10-year period, which, when combined with the recently acquired Kolpa operation that last year produced 5 million silver equivalent ounces, is said to put Endeavour on a path to annual production of 20 million silver equivalent ounces. Whether that is entirely realistic remains to be seen. All right, so let's wrap it up. Q1 simply was not a good quarter for Endeavour Silver in terms of financial performance. As one commentator said, the focus has clearly been on getting the delayed Terronera project into production, which has allowed costs to blow out a bit elsewhere. But with that being said, things are expected to get better from here, with Terronera now within a 90-day ramp-up window, meaning Q2 is important, but we should, at least in theory, begin to see the financial health of Endeavour begin to meaningfully improve in Q3, provided things go to plan, of course. All right, everybody, as you can see, we have lots of earnings videos for you guys on our channel. So if you're into mining earnings, well, guess what? You're going to love our channel. So check that out. Also, if there's stories that you want us to cover, please let us know in the comment section. I've said it once and I'll say it again. We got a list that we write it down every time one of you guys makes a recommendation. And we're trying to get to as many of them as we can. And sometimes there's names that we don't even realize that are out there that you guys put it down there. And it's like, hey, this is a production company we've never heard of. How's that? Let's take a look into this. So please keep letting us know what stories you want us to cover. And if you haven't already, smash that like button, subscribe, and ring that notification bell. All right, everybody. Thanks for watching.